This November, rumors circulating through the financial corridors suggest a change in fortune that might reshape the course of the Wall Street stock that is most talked about. Dan Ives' voice echoed, "What if he was mistaken?" Throughout Silicon Valley's bullish bets on Tesla, the behemoth of the stock market, have been prominent. Come along with us as we crack the code, examine the statistics, and investigate the electric avenues of investing that may lead to the greatest month ever for Tesla stock. Could this be the beginning of the end for Tesla, or is this simply another bend in the EV road? Tighten, fasten your seatbelts as we negotiate the whirlwind of financial projections, market rumblings, and the mysterious Elon Musk's grand scheme. Before we get started, please demonstrate your. Let's get started by showing our support by leaving a like on this video and subscribing to Tesla Insights. Despite what detractors claim about the dominance of home and office charging, a sizable majority of electric car service consumers will use the charging stations, with cost per kilowatt hour being a crucial statistic. Tesla has exceeded forecasts. Wednesday, Dan Ives, a Bush analyst, correctly emphasized Tesla's impressive performance, particularly after the company's second quarter delivery report revealed numbers that exceeded Wall Street's projections: 466,000 deliveries compared to a forecast of 447,000. Production also increased, suggesting improved capacity and a strong macroeconomic environment. Tesla's unique position in the electric vehicle market is attracting attention from rivals like GM and Ford. The company plans to transition from charging to battery management and ultimately fully autonomous driving. This is in line with its monetization strategies, which are effectively refuting negative perceptions. Renowned Tesla advocate Dan Ives has noted that the market has responded favorably to Tesla's partnership with Ford and GM. After the company revealed that it will be sharing its supercharging network, its shares saw an 8-month high. Peak is undoubtedly a profitable success for Tesla. Do you know of any other investors in PROT? Optimism for Tesla from our colleagues at Seeking Alpha, who provide in-depth coverage of the company's progress and insights into Elon Musk's innovative strategies, as well as the stock's performance. Seeking Alpha offers a distinctive viewpoint on Tesla's offerings. Truth in the middle of the regular media buzz. For in-depth research and a special offer, please click the link in our description to download it right away. Profit from our Black Friday deal. A strategic pricing is included in Tesla's roadmap. Cuts that put growth ahead of short-term profitability. The adoption of Tesla's supercharger network is growing, with expectations for more companies like Hyundai and Honda to join this trend that started with Ford and quickly included GM, Volvo, and Tesla. Tesla remains at the forefront of the EV market, as indicated by Ives, calling it a golden EV success story. This tactic has shown considerable success, particularly in China. Nissan and Mercedes-Benz, based on an ICE estimate by Wedbush, these partnerships might bring in up to $20 billion in income for Tesla. Despite spending a significant amount of money on its supercharger network, roughly $42,000 per connector, Tesla is actively attempting to claim a portion of the $7.5 billion federal subsidy meant to encourage the installation of approximately 500,000 high-speed chargers along important U.S. highways. The Biden administration has made it clear that Tesla's eligibility depends on how easily its network is accessible to other automakers. Comparing Tesla's solution to its competitors, who spend anywhere from $100,000 to $250,000 each connector, it is still more affordable. Tesla's stock has fluctuated, rising 10% this week and down 10% over the previous month. These moves seem to be correlated with the success of the broader tech market, especially the Nasdaq, indicating that future changes in the tech sector may have an impact on Tesla's shares. The general consensus is that tech stocks, particularly Tesla, which is seen as a transformative tech company rather than just an automaker, could rise in the second half of the year. Growth is predicted to exceed expectations, which would contribute to a developing tech bull market. With recent agreements granting other OEMs access to its infrastructure starting in the spring of 2024, Tesla's supercharger network, which is the largest in the world, has attracted a lot of attention. This calculated move is anticipated to greatly increase Tesla's revenue, possibly accounting for 36% of its total revenue by 2030, translating to a $1,010 billion to $20 billion business. Although the supercharger network is a crucial component of Tesla's strategy, Dan Ives notes that it is only one facet of the company's diversified portfolio, which also includes good production figures. a developing energy sector, and technological developments in autopilot and self-driving cars. Strong production capacity and a strong battery ecosystem all support Tesla's strong financial position and position it to benefit from the shift to electric vehicles. Tesla supports the government's objective of having no carbon emissions by 2050. With its EV castle now ready to monetize its accomplishments, including an anticipated additional $3 billion in revenue from the integration of Ford and GM's into its network, IVES confidently considers Tesla as a powerhouse. Additionally, Tesla intends to more than double its present capacity by expanding its supercharger network to 7,500 stations by 2024. The network's reliance on solar power lowers energy generation costs, boosting its profitability. Take Risks. IVES predicts that by the end of the decade, Tesla's total revenues might exceed $330 billion, a significant rise over the $94 billion that was recently predicted by the analyst community IVES. With one of the highest valuations for Tesla, community IVES sets a target price of $1,350 per share. Despite recent volatility, a large number of experts presently recommend buying Tesla stock, and the overall view is bullish on the company's growth trajectory. This valuation is based on a forward earnings multiple. Despite the obstacle of rising interest rates, Dan Ives has argued that the drop in tech stock values last year was overblown and predicts a strong recovery in the sector, comparing the present cycle to one not seen in 30 years. IVES continues to have a strong outlook on the technology sector, encompassing areas such as software, cybersecurity, and semiconductors. He believes that this is the start of a new tech bull market. Rather than a moment to be alarmed by valuations, the market is upping his price objective for Tesla to reach $350 while Tesla's stock is trading about $1,250 below IVES' target. IVES emphasizes that Tesla, under Elon Musk's leadership, has demonstrated its capacity to monetize its supercharger network and self-driving technologies. Bears continue, especially after earnings reports showed concerns about margin and ongoing price reductions. However, IVES contends that Tesla's growth story is only getting started, as shown by the stock's more than 90% annual increase. IVES counters the -1 viewpoint held by Cathie Wood from ARK Invest. IV sees Tesla as a tech powerhouse with its fully autonomous technology, establishing it as a top artificial intelligence firm. This viewpoint challenges the notion that Tesla is just an automaker by highlighting the company's key role in the tech and AI area. As the first phase of IVES indicates, the supercharging network is where Tesla's services will soon begin to be monetized. By 2030, the network might bring in up to $20 billion in income annually, greatly boosting Tesla's financial development. This prediction is predicated on the idea that by the end of the decade, EV adoption will rise from the current 3 to 4% of all vehicles to 20%. The transition from primarily home and workplace charging to a more varied pattern, which includes long-distance EV charging, is taken into account by IVES' model. Analyst Dan Ives of Wedbush Securities characterizes Tesla as the gold standard of EV success, which highlights the company's supremacy in the electric vehicle market. Major automakers like Hyundai, Honda, Acura, and others are joining Ford and General Motors in utilizing Tesla's charging infrastructure, which is expanding the adoption of the company's supercharger network. The firm seems to be headed for more success thanks to technological advancements and ever-expanding network of superchargers, industry analysts like Dan Ives anticipating an optimistic future, and Tesla's affiliation with renewable energy projects. What implications does this have for IVES's future? Could Tesla continue to lead the race to create a planet free of emissions? How will the expansion of their supercharger network affect their market share and sources of income? Please share your ideas in the space provided below for comments, and don't forget to like and share this. Thank you for watching, and please subscribe to Tesla Insights. We'll see you in the next update.